G'day, good morning, welcome back to my channel. In today's video I want to go over a TK bullish setup. So I'm going to go to the Bitstamp chart, and this is the correction from 2008, the December bottom at $3,000. On the chart I've just got the Tinkinson and the Kijun, and the Kijun is red and the Tinkinson is blue. I've taken the Kumo off this chart just to zoom in and show you the setup as we go through it. So here's the checklist, the questions I like to ask myself. So we'll go through these one at a time. Price above Kumo. So go to the chart, throw the Kumo on. So we can see that the price through here is above the Kumo, and the Tkcross has happened on this candle here. Okay, so this is the daily close that the Tkcross, the bullish Tkcross happens. So first question, price is above Kumo, check. Second question, bullish Kumo twist. The Kumo is green, so it's bullish. Third question, is Chiku span above price? We'll go back. And you can see here, Chiku span was above price, and then it's gone into price at these candles here, and then it's come through the other side, so it's above price. So that's the third filter on the setup. Enter Tkcross at candle close. So I've marked this level 3,982, so that's where you would enter. Now your stops is going to be related to your stop loss strategy and your risk management. So there's some different options on how you'd set your stop loss. Stop loss Kumo top, which is Senkou span A. Bottom of Kijun. So if it breaks the Kijun level on a daily close, or the previous bear fractal. So that's your stop loss. So let's go back to the chart. I'm going to put the fractals on. Okay, there they are. So here's a previous bear fractal. And we can mark that level. It's 3,775. So I usually like to put the stop loss underneath the fractal in case we get some play back in this area and price wanted to come back to that level. So now I'm going to remove the Kumo and Chiku span just to clean up the chart a little bit better, so we can visualize this play out. And I'm even going to take off the price action, the candlestick, so we can just really zero in and see when the TK crosses bearish above the cloud. Okay, so this is going forward in time, this is the price action, and this is just the Tinkinson and the Kijun. This is just each excuse me, each progression is a day, because we're on the daily chart here. So we're going to pause it, And slowly go into that cross. Dus. Okay, there's the cross there. So I'll bring back the price action and we'll go to our spreadsheet. So question number 6, exit bearish Tkcross, price close below the keyjourn / fractal. So those are your different options for taking profit on this trade. So if you were taking profit at the Tkcross like I would have, you would have taken profit at this 8,176 because that's where this candle closed on the Tkcross. And if you just zoom back, this was the stop loss, which we can go and confirm that price never violated or went below that stop loss there. So it's a profitable trade. We abide by always trading with a stop loss, sound money management, and yeah, in this given scenario, it was a 104% gain on this trade. So if I zoom back in, I'll just throw the Kumo back on. We can see it crosses bullish again here on this candle close, and as price goes on, you can see we would have been able to make an additional trade here, and I've already marked the levels. So we recrossed on this candle close. So that's another buy signal because it's a Tkcross above the cloud as previous, and we can see from this entry at 8,974 the market progressed up to almost a $14,000 area, and then we corrected. So yeah, you're never going to get the top with this strategy, but you're still going to make a profit if you buy by the strategy itself. And yeah, you would have made an additional 21% on that Tkcross bullish strategy. So that's the end of the video there. Hope you enjoyed this video. You could leave a comment, you can leave a like or a dislike, whatever floats your boat. This is definitely not financial advice, and happy trading.